Hey, and welcome back to Trades and Trends. I am your host, Kyle. Today's date is August 23rd, 2024. So we have the Jackson Hole Symposium going on for the next few days. But this morning we had Jerome Powell from the United States Federal Reserve talking, and he had a speech early hours. It was supposed to be pre-market open, I'm fairly sure. Not sure if it got rescheduled or if I just had the wrong time zone set. It ended up actually taking place an hour later than I suspected, about half an hour into the market session. So everybody was sitting around on their hands waiting for him to get to the microphone. And Powell revealed way more than I expected, basically all but guaranteeing a rate cut in September. Pretty much walked out on stage and said the time has come for policy to adjust, indicating that it is time for a pivot, and the Fed is going to stick with that. All that's left to question is by how much will rates be lowered, and by how many cuts will they be doing by the end of 2024. Now, of course, any cuts will continue to rely and depend on economic data as it gets released in between now and upcoming meetings in between each meeting. And we might even see periods of rate cuts, 2 or 3 in a row, maybe even 1 or 2, and then a pause for a meeting or two, further rate cuts, pause, etc. But it's also not yet clear if Powell intends to be making minor adjustments, such as by 0.25 or even in smaller increments, or if we're going to see much bigger moves. Now, Powell said, quote, "The current level of our policy rate gives us ample room to respond to any risks that we may face, including the risk of unwelcome further weakening in labor market conditions." So he's talking about how, since it's sitting at 5.25, 5.5%, they have room to go lower if they need to go lower, potentially if the job market worsens. Now, they're not planning on that, so I think that has to be taken to note as well. Even though we're at 5.25, 5.5%, they're not planning on the job market getting significantly worse. So if we're doing little micro cuts, if we end up doing smaller cuts, on and off, or even just a couple of cuts in a row, and then say, okay, it's good for the time being, and then suddenly we're getting 0.5, 0.75% cuts, to me that's suggesting there's a problem that either we're not being told about or something has happened behind the scenes. Either they're getting data around the job market that suggests that they need to cut immediately in a large amount. I hope that we will continue to get the same transparency and openness and public communication going forward around kind of the ongoing monitoring of job market conditions and such, and also clarity around how many cuts that they intend to be doing here in the near future and by what size. Now, you know my concerns. I have voiced them here previously. My concerns are that we either lower rates too quickly and inflation sneaks back up on us, or that we cut rates too little too late and end up having to do emergency cuts or unplanned cuts to mitigate issues as a result from that. Now, I also want to note that the Fed is ending its tightening cycle and is starting their next easing cycle with stocks at all-time highs, something that has not happened in the history of capital markets. And it's also noteworthy, looking at the Federal Reserve's balance sheet, that they are still north of $7 trillion in assets. And while, yes, they have been unwinding a significant amount over the last year and a half, 2 years or so, month over month, tens of billions of dollars of assets that they're not purchasing and putting back on their balance sheet, and so letting those go and expire. That's still a significant amount of money to be hanging on to. I suppose I had hoped that, and I also we don't have clarity around this yet either, if that means that the balance sheet unwinding is also pausing here in the next month or two. I would like to see the balance sheet unwinding continue, even if in smaller amounts, while interest rates maybe come down a little bit, so that we can continue to put some leg room on the balance sheet. Now, I suppose theoretically the balance sheet doesn't really have a limit, and that's its own problem and a discussion for a different video. But hopefully they continue maybe a little bit of a blend of quantitative tightening and easing and not just go full 180 in the opposite direction. Now, stocks rallied on the news, and the S&P 500 closed just around 1% positive for the day, and other indexes performed just as well. The Dow Jones up about 450 points, the Russell 2000 rising nearly 3% today. It was a bit rough in the morning. The S&P 500 had a really good move immediately after his speech had started. Then markets managed to sell off that entire move and go on to make not just one, but there was two lower lows intraday for the session before finally getting some traction again after lunch and making its way back all the way up, pretty high up north into the end of the trading day, almost making a new high. So that was a pretty impressive move. And I am not trading often at the moment, but I did manage to sneak one in today. I saw those lower lows being established, but the buying pressure and the momentum when it was making upswings was so strong. I thought there was an opportunity to be had there for another move up into the close. And so I jumped in, not at the bottom, but I managed to get in a decent entry price. And I had two separate orders, and I posted both of those trades over on the Theta Gang website, and I have that link down below if you would like to look at those, and I have my history there. So I made two different options entry trades, and they were both long 0-day expiry option calls on SPY. And though they were high risk, I had very high confidence of their profitability. And so I went for it. In fact, I liquidated some of the other positions that I had started building in the trade log here, primarily the 10 shares of Dollar General that I had. I liquidated that, and I sold one of Carvana so that I could have some equity to put into this trade. And I didn't feel confident in that those were going to do anything particularly extreme today either. So I thought, well, we'll get in, get out, and then I can rotate some of those funds back into other things if I see that fit. So yeah, I hopped in two different call option trades, one to initiate the position and a second one to average it down. Once I was looking at a little bit of drawdown, I decided to add more to it. I put a little bit more money in the fire, and it ended up working out for me today, and I managed to get out of there with about $485. So I'm happy with that. I'm glad I made that trade today. I didn't have to pay attention to it too much. I just trusted myself and my confidence in it. And of course that can be wrong, and there are times where that will be wrong. But thankfully today the market was willing to share some of its profits with me, and I took that graciously. I tried not to get any greed involved or emotions involved. I took whatever it was willing to give me and got out and ran. So it was a great Friday. I ended up rotating some of those funds into 16 shares of Dell at $112 each. So I would like to see some AI and tech moves going into their earnings here at the end of the month. So stay tuned for that. I think next week should be just as interesting with a couple of big tech company earnings going on. Dell has their earnings on the 29th, and so I like that I'm in there. NVIDIA has their earnings, I believe, also on the 29th or towards the end of this month here. So there's a number of some bigger company earnings that are going to be coming out. So what do you think of the Fed's pivot announcement? I suppose I was accounting for there not being any interest rate cuts towards the end of 2024, but I think this job market data has come out recently with the miscount of the Bureau of Labor Statistics being nearly 30% off their track record, and we also had the spike in the rate at which unemployment is rising. So I think that all kind of came a little bit unexpected and put the Federal Reserve a little bit on edge, on their toes, and really got them perked up to the idea of, well, maybe this is the time to be cutting rates. So tell me your thoughts though. I'm curious what you think about it, and I will be back around on Monday doing a daily news then. So thank you so much for watching, and if you've not subscribed, please consider subscribing, and I will see you all very soon.